If you have more than $10,000 or ever plan to move that kind of money, you need to hear this before it costs you everything. There is a rule your bank will never sit down and explain to you, a rule the government enforces automatically, and one that has already trapped thousands of honest seniors. People who did absolutely nothing wrong. No crime, no fraud, no bad intentions. Yet their accounts were frozen, their money was seized, and their lives were turned upside down simply because they did not understand how this rule works. If you are retired, approaching retirement, helping family financially, or planning to move a large amount of money at any point, you cannot afford to miss a single minute of this. By the end, you will understand the $10,000 rule, how it truly works in 2026, and how to protect yourself before the system places you on its radar. Before we go further, let me say this clearly. This channel exists for people like you, seniors, retirees, and hardworking Americans who followed the rules their entire lives, but were never shown how the modern financial system actually operates. If no one has ever explained these topics to you clearly, honestly, and without scare tactics, that is exactly why this channel is here. I regularly upload videos breaking down bank rules that catch people off guard, IRS letters and what they really mean, protecting Social Security and Medicare, cash transactions, inheritances, family gifts, and financial mistakes that are easy to make but difficult to fix. If you want information explained for you, not for Wall Street or big banks, subscribe and stay connected with this community. I will continue covering this topic and related rules that most people only learn about when it is too late. Stay informed, and let's make sure you never learn these lessons the hard way. Now let us make one thing very clear. This video is for educational purposes only. We are not lawyers. We are not certified financial advisors, and nothing here should be taken as legal or tax advice. Every financial situation is different. Our goal is simply to help you understand a rule that banks and the government quietly operate under, a rule most everyday Americans, especially seniors, were never properly taught. After watching, consult a licensed tax professional or financial advisor who can review your specific circumstances. So what is this $10,000 rule? It is part of a law called the Bank Secrecy Act, in place since 1970. The law itself is not new. What is new is how aggressively it is enforced in 2026 and how many seniors are being caught off guard by it. Under the Bank Secrecy Act, every bank, credit union, and financial institution in the United States must automatically file a currency transaction report, known as a CTR. This happens any time a customer deposits, withdraws, or transfers more than $10,000 in cash in a single day. The bank does not ask your permission. They do not warn you beforehand. They do not send a notice afterward. They simply file the report with the Financial Crimes Enforcement Network, a bureau of the U.S. Treasury, and it goes directly to the federal government automatically, every time. Many people assume that if they are not doing anything wrong, this does not matter. That sounds reasonable, but reality is more complicated, especially for seniors. Older Americans often receive large, lump sum payments that are completely legitimate. Life insurance payouts after a spouse passes away, proceeds from selling a home or property, pension distributions, inheritances, legal settlements. Sometimes people simply withdraw a large amount of cash because they want to make a purchase, help family, or feel safer holding cash. All of this is legal and normal. But the moment one of these transactions involves $10,000 or more in cash in a single day, a federal report is filed, and your name enters a government database. Not because you did anything wrong, but because the number crossed the threshold. You might think, if I did nothing wrong, who cares? Here is where it becomes frustrating. Federal agencies use CTRs as triggers. They look for patterns and unusual activity. Even innocent transactions can lead to closer review. The IRS may want to know where the money came from. They may verify that taxes were paid. Your account could be flagged for additional scrutiny. For a senior already managing Medicare, Social Security, and a fixed income, the last thing you need is an IRS letter asking questions. That alone can cost time, stress, and accounting fees, and in some cases affect eligibility for income-based programs. It becomes even more serious with something called structuring, which is a federal crime. Structuring means intentionally breaking up a large cash transaction into smaller amounts to avoid the $10,000 reporting requirement. For example, if you have $30,000 in cash and someone suggests depositing $9,000 this week, $9,000 next week, and $9,000 after that to stay under the limit, that is structuring. Even if the money is clean and earned honestly, deliberately staying under $10,000 to avoid reporting is illegal. Banks are trained to detect this pattern. If they suspect it, they file a Suspicious Activity Report, or SAR, which goes directly to federal investigators. There have been real cases where seniors, farmers, and small business owners had accounts frozen and money seized, not because they committed another crime, but because their deposit patterns appeared structured. Through civil asset forfeiture, the government can seize funds suspected of being tied to illegal structuring, and you must fight in court to recover it. That process is expensive and stressful and can take months or years. For someone on a fixed income, that can be devastating. Many involved had no idea they were breaking the law. They believed they were being cautious. They did not realize that breaking up deposits is itself a crime. Seniors are particularly vulnerable in 2026 for several reasons. Many grew up in an era when cash was common. You were paid in cash, saved in cash, gave cash gifts. The idea that handling your own cash could trigger federal attention feels foreign. At the same time, many seniors are experiencing larger financial inflows. Inheritances from parents, real estate sales in a high market, insurance payouts, pension distributions. Large sums moving in and out of accounts can look unusual to automated systems, even when everything is legitimate. Many seniors also help adult children or grandchildren. A grandson needs help with a down payment. A daughter needs emergency funds. A $15,000 withdrawal in cash triggers a report. Several smaller withdrawals afterward could trigger suspicion. The system sees numbers and patterns, not intentions. So what should you do? First, use the banking system properly. If you need to deposit a large amount, deposit it at once. Do not split it up. A single large deposit that triggers a CTR is far less suspicious than a pattern suggesting avoidance. A CTR alone is just a record. Structuring patterns trigger scrutiny. Second, keep documentation. If you receive inheritance money, insurance proceeds, or home sale funds, keep every document. Checks, settlement letters, closing paperwork. If the IRS asks questions, a clear paper trail resolves issues quickly. Problems arise when money cannot be explained. Third, use checks or wire transfers instead of cash for large transactions. These create automatic records and are far safer than moving large amounts of physical cash, which is monitored closely because of its anonymity. Fourth, understand the annual gift tax exclusion if giving money to family. The allowed amount changes yearly, so confirm with a tax professional. There are legal ways to give money without creating tax complications, but planning matters. Fifth, for major financial events like selling property or receiving a large payout, speak with a CPA or certified financial planner beforehand. One professional consultation can prevent months of trouble. There is also growing concern in 2026 about how this rule intersects with Social Security and Medicare. If the IRS reviews your financial activity and determines your income was higher than reported, it could affect Medicare Part B or Part D premiums, which are income-based. In rare cases, adjustments can even be retroactive. For those receiving Supplemental Security Income, SSI, strict asset and income limits apply. Mishandling a large sum could temporarily affect eligibility, which can be financially devastating. Emotionally, IRS letters create fear and embarrassment. Some seniors panic or ignore correspondence, which only worsens the situation. If contacted, do not panic and do not ignore it. Contact a qualified tax professional immediately. With proper documentation, most issues resolve cleanly. Scammers also exploit this fear. Fake IRS calls, threats of arrest, demands for gift cards, these are always scams. The IRS does not call demanding payment or threaten arrest over the phone. Hang up and contact official sources directly if concerned. Digital transactions are also covered. The Bank Secrecy Act applies beyond physical cash. Electronic transfers and certain digital transactions face reporting requirements as well. The same principles apply. Document everything, avoid structuring, and consult professionals when unsure. Peer-to-peer apps like Zelle, Venmo, PayPal, and Cash App have reporting thresholds too. If you receive significant payments, even from family, understand how they appear on tax forms. A brief discussion with a tax professional can clarify this. The $10,000 rule was created to combat serious crime, not to punish honest citizens. But the same system that catches criminals also captures people who simply do not know the rules. Seniors, with decades of savings and financial responsibilities, are especially likely to encounter large transactions. The rule itself is not the enemy, not knowing it is. The most powerful step you can take is education. Talk to your banker, talk to your CPA, talk to a financial advisor. And if family members help manage your money, share this information so no one unknowingly suggests something illegal. You worked your entire life for what you have. You paid taxes, followed the rules, and saved carefully. You deserve financial security without fear or confusion. Protecting that security means understanding the system you operate in. The $10,000 bank rule is real, it is enforced, and it affects real people every day. Now you know how it works. Now you can make informed decisions, protect yourself and your family, and move forward with confidence and clarity. Share this information with other seniors in your life, because knowing it truly can make all the difference.